Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB. Hard to believe it's Thursday afternoon. I'm Nadine Blaney.
I'm Juliette Solly, and what a day it is in Sydney and what a day on the market.
Yes, certainly has been sort of a tale of these competing forces, right? Because if you take a look at what's on the screen with the CIBO Australia Index, the miners have proved to be a insurmountable weight on the market, but you sort of contrast that to the tech sector hitting a record high earlier today. We've got a lot of enthusiasm because of those U.S. earnings coming in very strong for the likes of Microsoft. So yeah, it's an interesting market right now.
Absolutely. And speaking of those earnings from the US, we spoke to Dan Ives earlier. He called it a slam dunk for Microsoft, and it's really just about this spending on AI, isn't it? The Microsoft CEO Satya Nadella saying they're just getting started, calling it a new era of AI-powered productivity.
Yeah, Microsoft was actually the stock of the day on the call today. We did a bit of a hybrid Australia-US special, and my guests were saying basically that Microsoft took a bit of a risk by going very hard into AI, spending big on AI really early in the piece, but that's paying dividends for them now because they're able to monetize it, and they're pushing forward with the revenue gains from that. So it was a gamble that has clearly paid off.
And it is seeing tech futures rip, suggesting that we will see a good night with Apple and Amazon out again tonight as well. But on the China front, a bit of a fizzle.
Bit of a fizzle coming through in those PMIs, and I think that was the nail in the coffin for some of those miners. Of course, the scene was already set with the price of copper plunging when we had Donald Trump talking about those 50% tariffs being put on the red metal.
Yeah, and for Brazil as well. Wow. Let's have a look at the earnings galore as well. You know, we're ramping up. We've got ResMed tomorrow, or tonight, I should say, in the US coming through with earnings. But so many, not only big US earnings that we touched on, but starting to ramp through here as well in terms of a lot of the production updates too.
Production updates, and don't forget, around this time yesterday, we had Rio's
Tinto,
half-year result. And so we've watched the market reaction to that dividend being cut. Iron ore, look, the lithium assets raising debt, although Morningstar for one today said that, look, it doesn't anticipate it will be a long-term impact. That was for that Arcadian lithium acquisition that the company did make.
Yeah, absolutely. Big falls, though, from those mining players. When we look at the tech players, looking much brighter today. Block is not on there, but Block was, I think, doing quite well as well. Zip up by 2.5%, and Block is among those that reports early on next Thursday, I believe.
Yeah, and look, we held our investment committee meeting, it being the final day of the month, and I will say Block was in and amongst the discussion. But also, just to your point about those production updates coming through, yeah, some of my guys were saying this is the worst production sort of season that we've seen come through in quite some time. You know, rising costs really biting a lot of these miners. And if you think of what happened with Boss Energy just the other day, you know, execution, mine problems continue to be the wild card.
Yeah, look at the retailers though, because retail spending was out of the blocks last time in that series. 1.2% gain for June versus estimates of 0.41%. And I found this interesting, Nadine. A lot of it was thanks to not only end-of-year financial discounts, but the highly anticipated launch of the Nintendo Switch 2.
Don't look at me.
Not looking at you. I'm just looking at anybody that's a gamer.
I'm surprised it's not the Lafufus and Labubus that has helped drive some of those retail sales. There's the banks, bit of a mixed picture, but overall into positive territory.
All right, well, we touched on Rio, of course, logging its smallest first half profit in 5 years. It was down 16% due to lower iron ore costs, and Rio down 3.5%.
AGL has greenlit a $515 million grid-scale battery project. Shares were down just marginally.
Flight Centre delivering a profit warning. This was due to uncertainty in the Middle East and people not booking trips to the US as well because they're very concerned.
Trimming its annual outlook, but I was reading some analysis by E&P, I think it was today, saying that this looks to be the last downgrade in their view coming through for this cycle for Flight Centre. Beach Energy, yeah, it had a pretty poor day on the boards. Output, floods, fourth quarter sales revenue was 17% lower quarter on quarter.
And Santos achieved a major milestone at its picker phase 1, saying it's almost 90% complete, shares up 0.5%.
Satire got hammered, so it says that it's still assessing the full implication of tariff changes. So those small package tariffs in the United States plunging 25%.
Money Me, we just spoke then to the CFO, shares up 3.5%. Thanks for joining us, David Reich.
ImpediMed has dipped on lower quarterly revenue. So we're in this quarterly update phase from a lot of these small caps that are not profitable. Drone Shield advanced further after Bell Potter and Shaw Partners upgraded the company to buy, put in 17%.
And Pilbara Minerals says that it is set to stabilise in 2025. Morningstar, though, has cut its valuation on PLS, shares down 8%.
Warm welcome to the COB, Jimmy Jang, who's joining us from GBA Capital. Jimmy, nice to see you this afternoon. What do you make of this session that was, as we mentioned, those competing factors between the miners and the tech names?
Afternoon, of course. Like you guys just mentioned, we saw that big news coming out from the US that narrowed than expected the 50% tariff on copper pipes and obviously wiring, which obviously led to close to 17% plunge in the US copper prices. And on top of that, we saw the gold stocks also felt some pressure. Northern Star obviously led the loss, nearly 3% today. And it was a kind of rough there across the whole the resource complex. But tech obviously has been the major focus on the market, but I think what we kind of saw overall in a kind of a bigger scheme of things is the valuation of the ASX 200 in general. I think it's kind of covered by other professionals that it's definitely kind of stretched. It's kind of more than 2 kind of standard deviations above the long-term average of close to 15 times. So what that means is that the investors are paying a premium for a growth that really hasn't materialized. And we're also seeing a lot of these earnings reports coming out from the companies as well. But the earnings haven't been quite flat from what we saw so far. And then the ASX had kind of still kind of delivered a close to 30% per annum over the past 3 years. So the risk is that if those earnings don't kind of catch up now that we're seeing very soon, or if the RBA decides to hold the rate higher for longer at this level, that re-rating could obviously win wide, and we've got to be very cautious on the valuation here. So we're putting some hedging instruments into our portfolios and making sure that we don't suffer too much of volatility or what's coming ahead.
How are you sort of then hedging against all of the uncertainty, Jimmy?
There's a lot of different instruments available depending on the type of investor you are. So if you're more kind of focused on or get an exposure on the retail side or just on the market, there are a lot of great ETFs that's out there. So for example, there is a ETF called BBOZ, which is a hedging instrument or a shorting instrument against the performance of the ASX 200. And also if you want to short the kind of hedging instrument against the US market, so there's BBUS, which is the S&P 500. For wholesale investors, there's also kind of a lot of structured investments that we put together that gets a leveraged exposure to the performance of the S&P 500 going down. So that's another kind of great way to make sure that we cover those kind of exposures. So these type of hedging exposures are also great, but there's another kind of great way to do it, which is more fixed income. Real estate, private credit is still a pretty good, in my view, hedging instrument against the equities exposure. That's probably another way to go forward.
Now, Jimmy, today we saw the miners really take a hit, for a number of competing factors. But we've been talking continually about this great rotation, so-called, that is happening or should be happening in the market. What's your take?
Absolutely. And I think we got some big announcements coming out soon, potentially in Australia. Market's obviously strongly pricing in a 25 bip cut by the RBA in the coming meeting on the 12th of August. So I think a lot of the money that's been tied up in the financial sector is definitely coming through to the material sector, and we saw that consistently through a lot of these corporate placements and different shortfall share purchase plans and all these kind of deals that's being offered by the material companies, and we are actively participating in a lot of these type of placement that's available. So just to kind of give you a recent transaction, we participated in a pretty much on-market placement offered by St. George Mining. and that was at 3.8 cent. And they had some strong rare earth LME results announced this morning. And they hit up to about 13.4% trio, and more importantly, the neodymium ratio hit about 35%, which is high value rare earth element mix. So I right now I think it's more so you got to now really focus on the company rather than the sector in general, because it's kind of given that the material sector is due to perform quite well over the next 6 to 12 months. But if you're in a wrong company that doesn't really produce much of a promising outlook, then it will be very difficult to obviously grab that growth. So for anyone that wants to kind of get that really good rare earth exposure in Australia that's not producing or is coming very close to production, St. George Mining is probably a very good one to allocate.
Yeah, right. So that's one you like, but a couple of other small caps on your radar as well, including Mika Gold and Wiser.
Absolutely. And gold is still a very good asset to hold. In our portfolio, I've allocated close to 20% of our portfolio allocated to gold companies, and Mika is definitely one of them that we are strongly supporting. So they've obviously completed a commissioning of the Murchison Gold project, and that the gold production is now ramping up very smoothly. It's pretty much right on schedule. So the open pit mining is underway, and then the underground mining is kind of set to begin in the September quarter this year. And obviously early gold sales and the positive cash flow should begin early July. So with this kind of really good outlook that's coming ahead, there's no other companies in our radar right now other than Mika that will want to get this type of very close to production companies in the gold space. And also operationally, they have no lost time injuries, which means that a strong starter on both the safety and also the production front. So this is probably the best company, and in our view, to kind of get into that gold production companies in Australia at the moment. And as you mentioned, Juliet, Wiser, obviously they posted a really strong year-on-year jump in origination for the June quarter. Financial sector, like I said, the top 4 banks is it's not much of a growth that we can see at the moment. But with these type of like a Wiser companies where it's their 3rd straight quarter of a loan book growth, I think it's a fantastic allocation to continue to accumulate in a portfolio, especially in this given time.
Right, Jimmy, thank you. As always, have a good rest of your day. Jimmy Jiang from GBA Capital.
Now, I did mention that the stock of the day was Microsoft, and my guests were Mark Moreland from Value 3 and Mark Gardner from MPC Markets.
2 gigawatts of power. That is massive in the last 12 months. And the Copilot's now got, which is their AI product, has over 100 million active paying monthly users. So they're going very, very well, and it's a money machine.
The new management has made all the right moves. They went, and it was pretty risky to go as hard as they did, as early as they did, and it's just paying off beautifully now. So I think this is a bit of a new Microsoft. I mean,
it's got its mojo back.
It's got it, yeah. That's probably the best way to put it. So I would obviously, you'd like to buy it cheaper, but I think you probably need to move up where the PE range has been, or forward PE ranges have been for the last 5 years. I think you just need to adjust that up now, because I don't think it's going to be cheap.
So both of my guests put a buy rating on it, but I think it's worthwhile pointing out that Mark Moreland said that he is not buying it for his own portfolio right now. So as always, do your own research. But you also might want to take a listen to that Dan Ives interview that you referenced earlier on. I thought it was worthwhile.
Let's have a look at the market leaders in the session. You're in pharmaceuticals up there again, as well as Guzman Gomez Iris, which is reporting next week. Yeah, but this is what I was going to say, is that there's no news that I can see associated with some of these percentage winners, which is always an interesting dynamic in the market, but lots of tech sort of amongst the best players. Absolutely. Life 360 there as well. All right, let's have a look at the laggards.
Champion Iron, we've got a production report coming through there. We've got a lot of broker moves off the back of that. Beach on its production update. Pilbara Mid-Res had a shocker of a session, didn't it? So it had its price target cut by Barrenjoey to $33 per share. Morgan Stanley sits at $37.50. But yeah, there's a lot of interesting news flow around MinRes, and then Flight Centre with that downgrade coming through.
All right, in the small end of town, Sunrise had a great session, up by about 24%. Again, to your point about tech, Weebit Nano, Airtasker, it also came through with an update today. I think it was its best quarter on record, up 16%. Sonmo Med and Victory Metals there as well.
The laggards, though, I'd be surprised if, Centire wasn't on the list. In fact, it tops the list by percentage terms, down by close to 25%. And ImpediMed also was out with a quarterly update, shares down by close to 12% to 5 cents per share.
Tonight, Eurozone unemployment due to hold steady in June. Also a fair bit out in the US, including personal income and the PCE deflator.
Yeah, personal consumption is expected to tick higher because it declined the prior month. The PCE deflator should reflect some tariff, pass-through. And we've got the employment cost index. We're expecting it to trend downwards, but expecting initial jobless claims to be pretty stable.
And earnings, of course, Amazon, Apple very much in focus, and we'll have the reaction to Microsoft and Meta, MasterCard, Snap and Coinbase also reporting.
Sanofi is also one that's reporting. Tomorrow here we get the Cotality Home Value Index and the PPI.
And just on home values, I had a great chat to Anthony Lundell from Equilibria Finance. Every time you see Anthony, he's just like, I'm more busy than I was last time. You know, the volume, well, exactly, but the volume on people he says that are buying and selling, even though the average home price in Sydney now, $1.7 million.
Oh gosh, I fear for all of those coming up behind us, Juliet. All right, here's the final picture of the CIBO Australia Index. I will say that we are keeping a very close eye on the S&P ASX 200, which has closed again weaker. It looks like we've shed about close to 0.2%, 8,742.8. And I'm just checking in on US futures, NASDAQ E-mini still ripping, up by 1.4%. But I dare say those results from Apple and Amazon will dictate a lot of what happens overnight.
Indeed. We are going to be back bright and early. We've also got the ResMed CEO joining us, so we'll have that in our 10 o'clock show. Lots to get across. We'll see you from 9:45 a.m. Eastern.
Have a good night.